What up guys, welcome to my YouTube channel, the Ion TV. We are here to talk business once again. We are here for the second episode of our financial part, our financial aspect, our financial tips. So today guys, we're mainly going to look at what financial principles are all about, and I will give you one financial tip. That's the first financial tip out of many. So guys, what are financial principles? When you look at financial principles, these are fundamentals that guide the aspects of account, that rule the business world. So the first two financial principles we're going to look at is, the first one is cost principle and the other one is the matching principle. So when we talk about the cost principle, or rather we can say, as some say, the historic cost principle. So when we talk about cost principle or historic cost principle, mainly this principle requires us to record the assets and the amount of the assets that have been purchased at the time they have been purchased. And this transaction, when it happens, no matter what, if there's an inflation or the market value reduces, goes up, it does not change. The assets and the price do not change once they are recorded. So that's what the cost principle is all about. So when you keep a record, when you record that you bought this item for $50,000, or let me say 50,000 dirhams, it's 50,000 dirhams. Whether the dollar increases or reduces, it will still record as $50,000. Our next principle, our second principle, is the matching principle. The matching principle simply requires companies to record expenses that they have incurred, or expenses that has occurred in the company in the period, in the time frame in which those expenses happened. So let's give an example of a company buys something at $60,000. Then there's a commission over 10%. That's $6,000. That's the commission. Now here, the transaction was done in December. The company will be inclined to register the commission in January, but rather than registering the commission in January, the principle tells us we're supposed to register the amount in December. That's when that transaction took place. You cannot register a transaction. You can't register a transaction for another month when it happened another month. You can't register a transaction that happened in December, register it in January. So that's what the cost principle is. Lastly, for our second episode, as I promised, I'm going to give you the first financial tip. Our first financial tip is protecting your wealth. So guys, as we have seen from the two videos we watched, the two principles we worked on, they're all talking about registering, they're all talking about writing, they're all talking about entries. So guys, this is a sense of protecting your wealth. So guys, we're going to talk more about protecting your wealth as our first financial tip in our next video for our third episode. So guys, don't forget to subscribe, like, share, and comment. Leave your comments. Let's know what you think and ask questions. We out.